Top story though, sugar giant Tongaat is facing a bitter harvest. Officials have suspended trading in the company's shares, that decision affecting shares on both the JSE and the London Stock Exchange. Members of Tongaat's board requested the suspension after it delayed the release of its financial statements. The company had already said it would have to republish previous results. It's also admitted that certain accounting irregularities have emerged. Tongaat has operations in South Africa, Mozambique and Zimbabwe. It said last month its 2018 results could face a potential hit of up to 4.5 billion rand. The company is in the middle of its turnaround strategy. It says it wants to deal with rising operational costs and a spike in imports. All right, let's get the latest now from ENCA business reporter Rupiwa Madzena. She's tracking the story for us. She joins us now live. So why would the board of the company call for the suspension of the company's shares?
That's right, Shahan. As you've mentioned briefly earlier, the company has to suspend the company's trading on the JSE because they have accounting irregularities. So members of the board, as well as the company's auditors, had indicated that they are extremely concerned with the levels of inflated numbers in the 2018 results. Last month, as you've mentioned, they had decided then to restate those results, resulting in losses that are higher than was anticipated. So it's at about 4.5 billion rand in losses for a company that's about 7 billion rand in debt already, Shahan. So these are very, very grim times for Tongaat when it comes to the company's outlook. They do say, though, that as soon as the results are released in October, those 2019 results, we will see perhaps the company continue trading on the JSE. But we have seen that the company has dropped about 5.3% in today's trading before trading was suspended.
Yeah, and money aside, let's talk about the employees and the implications for them.
So earlier this year, Tongaat had indicated that they had major operational issues and that they were making losses. I've mentioned that 7 billion rand in debt. So about 5,000 employees across the SADC region were facing job losses. This obviously might increase just based on the number of inflated revenue that we're seeing that's going to be coming out of that forensic investigation. So what we know for now, 5,000 people's jobs are on the line, depending on how the company is able to get out of its particular situation. We also know that the company is struggling quite a bit with increased sugar imports as well as that sugar tax, and it really has been struggling to make revenue with those increased competition and the sugar tax.
Yeah, and of course the company has been compared to Steinhoff, I must stress, because of accounting irregularities that have emerged. How's it dealing with this?
Yeah, Shahan, so this is very scary for the corporate landscape in South Africa. This is one of many companies that are going to be coming out to report that there are irregularities in the way that their auditing of their books is done in the country. As you mentioned, some comparisons there to Steinhoff, the fact that bosses of the companies are walking away with really, really great bonuses and salaries at the expense of the people that work for them, and lying to investors essentially to boost trading of that stock, Shahan. So when we say it's the likes of Steinhoff, we mean exactly that the books are being cooked, for lack of a better term.
All right, we'll leave it right there.